Hello and you're welcome. So we are going to look at candle patterns analysis. And when it comes to candle patterns analysis, we it comes to us that we are looking for opportunities to trade. So basically, when you come on the charts, there are certain things that should really come to your mind. You get? So we are going to start on the daily time frame. We are going to start on the daily time frame for this analysis. Basically, that's how I always do it. I start on the daily time frame, but when I come on the charts, I really need to find out the stage of the market where we are. So basically, for me, I look at three things. You get? So I look at the market should either be in indecision, and those are going to be consolidations. You get where the market is ranging, or continuation, whereby the market comes, let's say, from up to down, and then we'll get a pullback, and then it comes down, or a reversal. A reversal, that means, let's say, let me give an example. It's just over here, whereby you can see that we are making structures as we are breaking up like that. But then all of a sudden, you can see that the market reversed, and ever since we can see that we've been in a bearish trend. This is gold. This is the gold chart. So for those that will be watching right away, so I encourage you guys to subscribe to this channel. So that's the first thing. So which means on a daily time frame, that's the main point that really takes me there to the daily time frame. The next thing, on the daily time frame, some of the things that I don't do is that starting to mark off points like this. You get, these points are really far. These points are far for me to start highlighting these areas like that. So that's some trick that I used to do that, but I stopped. So basically, we can see that on gold, the daily time frame were coming down like that, just like this. So I really need to get the bias. I'm looking for the bias before I start analyzing. Remember, we are actually, for this strategy, we are going to go and we use at least one candle or two candles to predict the third. But in most cases, we can even use one. So that's what we do. Then at least now we can see that we've been in a downward trend, and we are. So which means on the day time frame, given that we moved up, given that we moved up, and then we didn't take out this point up, you get this liquidity point up as you're seeing there. Then what comes to my mind is that this one becomes a protected point because we've come back significantly, and then this point down here becomes targeted. So what do I mean by that? It's that now I start looking for more selling confirmations than buying entries. You get? So that's the next thing. So at least now we are getting the bias that we are in a downward trend. So I want to now go and refine further. Remember, I told you we look out for the most recent candles. So basically, which means as the day closes, you look at the way the candle formed to start doing analysis for the next day. So it is something that we can see here. So given that we are coming down, so we are going to be utilizing, for this video, we are going to be utilizing these rejections, these kind of rejections. They could either be bullish, like where the market was in a bullish trend, or they could happen as we are in a bearish trend. So given that we've gotten a bearish bias whereby we believe the market is coming down, what do we do next? The next thing we do is we look out for some rejection. So when we go on small time frames, we're going to find that in areas where we got rejections, these are areas where the market was consolidating. So in future, and I would recommend that you guys subscribe, we are going to be seeing how we can deal with ranges, deal with consolidations, and deal with these moves that are happening. So that's the next thing. So what am I going to do? I'm going to consider this candle here that got the biggest rejection, that got a big rejection. So what do? I'm going to draw a horizontal line. You get, up to the body. I draw a horizontal line just like that. What is the next thing that I do? Let me even not extend it so further this side. So I do, let me make it proper like that. So I do that kind of thing. Then I also highlight up. So basically, when you're just starting out, you may need to highlight the whole of this part on the daily. So basically, if prices were coming down and at one moment we try to go up and then we rejected from up, so which means we are going to look for confirmations to sell in this area because we believe the market will be coming back. This is a consolidation on a much smaller time frame like M15. So you find that there the market will be ranging. So basically, we want to see how we can get in early enough. So what do? I go on H4. That's the next point that I go to. We are refining. So this is the area that I've highlighted where the rejection happened. Where the rejection happened. Now, what do I do next? What do I do next? Now, given that we are rejecting from up. You get, we are rejecting from up. Now, I look out for the for the most recent rejections. The most recent rejection. Now I highlight here up to the body just like that. This was the first rejection that we got. So given now as we get it and then we get another rejection on H4, now this one is our zone. So basically we can get in here or we can see that we have opportunities down here. So in the upcoming videos, by the way, I'll be going in detail to this strategy, given that this is precisely my first video on this channel, and I welcome you. I welcome those that are going to watch. So what do I do next? I go to H1. You get, I go to H1. We are refining that entry to get the best entry position. Remember on the day we looked at for the we looked at for the bias. So what are we seeing on the H1? On H1, this is what we are seeing. You can see that on the daily, the rejection started here and then it came here. So basically, what were we doing? On H4, this is the part of the rejection. So now, what do we always see? Remember, we are not looking for buying opportunities. We are looking for selling opportunities. So the moment the market came and then it rejected on H4, what would we wait for? Now, there are these candles. In future we are going to go in candlestick anatomy, you get. So you can see that this candle here that you're seeing is a bullish candle, so which means it came and tapped into this area and then it started to sell. So basically, what are we going to be doing? We shall be setting pending orders. Now in future we are going to, on this channel we are going to be looking at only forex, and we are going to look more about smart money concepts. So basically we set our pending orders in this region here, you get. So as we came down, then the next thing, by the way, maybe that we can look at is we can see we are going to be so keen on this channel. We are going to be looking so keenly on break of structures. So basically you can see that I don't know that it will be clear to you, but then you can see that this candle moved slightly below here, so which means on a much smaller time frame there was a break of structure here. So basically, as the market reverses back into this gap, then we set a pending order here. So where do we set it? Remember, this is the H4 zone where the prices got rejected. So now what do we do? This is what we do. We set a pending order here at the body of these candles, that this candle where the wick started, you get. So this is where we look for to take our entries. So we set a pending order here. So this is a sell limit. The market comes, it taps into this gap and then it sells. So here our orders get triggered and then we sell. So what is this part? What is the significance of this part? Now you should be capable of knowing that it is possible that the market maker would move up to this point here, you get. So always be keen enough that you should not take greedy entries, because you should be able to hold a drawdown within this range here that you're seeing. So basically you can see that you'd grab, your orders would be grabbed, and then you get into the market and then you make profit. Just we know that our targets are down here, but remember, if I was to show you now this area here, let's quickly go back about our take profit level. Now this area here was quite significant here. because it tapped into the it tapped into the daily time frame demand zone. That's why we've gotten this reaction. So basically this point, let me go back on the daily, you'll see how significant it is. So let me go to H4. Sorry about that. Let me go to H4 and then I show you. So basically you can see that this bullish run that we've been dealing with, it started here. So the whole of this gap here, which we can be looking for, the whole of this gap here, we can be looking for bullish, like taking profit basically. And then we look out for the market structure that happens for the market to either be buying or to be selling. You get? So this one acts as our take profit level. So I can request you guys to subscribe. I'm going to bring more smart money concepts, which I'll be talking about indicators and everything. So feel free to leave a comment in the comment section about maybe what you want to watch next. I wish you the best.